Hello, it's Saturday, the 14th of April, 2007. This is Brian Shannon speaking from Alpha Trends, and we're going to go ahead and take a look at some stocks for trading on Monday. I've got shares of Ascent Solar Technologies on here, and obviously this isn't a new discovery to the new high list. You look at the stock, and just 2 months ago it was $3 a share, but the solar group has really been hot lately, and I think this stock can't continue higher. Let's take a look at the longer term. You see the weekly chart and monthly that this is all-time highs here. But looking at the daily time frame, you can see it's made a very nice stair-stepping pattern higher of higher highs and higher lows, like we're seeing right in here now. So I think that looking at a shorter term time frame, you can see that the stock is definitely a little bit extended here, but I think we can make a low-risk purchase by waiting for it to get above $10.60 a share. If we're wrong, our stop would go down here at about $10.28. So that's just 32 cents of risk. But this is the type of stock that can go multiple points in one day, like we saw here, here, and here. And I think that a minimum upside target is going to be about $11.50 a share. So that would give us 90 cents of upside for that 32 cents of risk. But again, it is an extended stock, so make sure you honor your stop if it does trigger a buy above 1060 and then trade below that that stop level, because it could unwind rapidly if it does go against us. Next up is Harmonic Incorporated, symbol HLIT. I think it used to be called Harmonic Lightwave. For some reason I remember that. But we've got a nice uptrend here. We've got that 10 just crossed back up through the rising 20-day moving average, which is above the 50-day moving average as well. Looking at a weekly time frame, it looks like the stock's got the possibility of making it up towards about that $12.50 level. Our target, though, we're going to be a little bit more conservative and just look for a move to about $12 a share. But it's clearly in a very nice uptrend. And today you can see it had a good day. It had a good day on Friday. In fact, it got a little bit extended late in the day Friday. So I think what we want to do is look for a pullback to at least $10.60 a share. Once it pulls back, we want to then buy it on strength above $10.70 a share. So I didn't draw that line in too straight. But first look for the pullback to 1060, then buy the strength above 1070. We could then put a stop at about $10.46 a share. So that would give us 24 cents of risk. And in this one, looking for $12 a share, that would give us 24 cents of risk for the opportunity to make $1.30 in profits. VeriSign, this one kind of actually reminds me of eBay from Friday. If you look at this daily chart, you can see here that we've kind of got what's looking like a little bit of a cup and handle like we saw on eBay. Here we can see this being the cup, this being the handle. And again, all the cup and handle is just a series of higher lows showing that the buyers are getting more aggressive price-wise, followed by a repeated test of resistance. The more times resistance is tested, the more likely it is to fail to hold the stock back, and the more likely a breakout becomes. So you can see the time between these tests has diminished as well, meaning that the buyers are getting more aggressive, not just price-wise with these higher highs, but also time-wise as well. So if we look at a weekly time frame, you can see that this level is an important level and has been for several years. Let's just take a look at eBay again just to see what happened there. But this is the same thing as eBay that we saw on Friday, and it broke above that level. You can see on the daily time frame a little bit more clearly the comparison between VeriSign and eBay. So if eBay looks like maybe it's a day ahead of VeriSign. Let's go back to VeriSign. Here we are back to VeriSign. And looking at a weekly time frame, again, you can see breaking out here. I think the stock's got a minimum of $28 a share, probably even up towards this, probably 30 over the next couple weeks or so. But we'll just look for $28 a share. Here's how I think we ought to get involved in the stock. Let's look for just a little bit more pullback. 26.25 is where we'll look to see it pull back to. Then buy it above 26.35. And we could then set a stop at about 26.08. That would give us a risk of just 27 cents for the opportunity here to see the stock up at $28 a share. That's $1.65 away in VeriSign.